Most traders see a short squeeze as a career-ending threat. Our best traders see it as one of the greatest opportunities in the market. In this video, we're going to teach you not only how to sidestep the danger of a short squeeze, but how to actually profit from one with two powerful setups. I'm Mike Bellafiore, co-founder of SME Capital. We're a proprietary trading firm in New York City and Miami that has trained numerous traders to become 7- and 8-figure-a-year producers. Learning how to turn fear into opportunity is what we do. Let's dive in.
They thought it was dead. A broken stock, bad earnings, gapping down after really poor performance. And yet, right here at 9:40 a.m., 10 minutes after the open, everything flipped. Over the next 30 minutes, the stock soared more than 25%, and shorts got completely obliterated during that time. This is the anatomy of a real short squeeze and how you can spot the next one before it happens. A short squeeze is pretty simple, and we're going to look at a small version that can happen on all time frames. But it happens when too many traders bet against a stock by shorting it. And then ultimately when they're getting caught as it unexpectedly rips higher. As the prices rise, they're forced to buy back shares to cover their losses. And that demand sends the stock even higher. It's this little thing that builds and builds and builds and builds and builds and builds. It doesn't always happen because a short needs to get out, because they're in a bad position. It can happen when they're just covering a short, but the price action is exactly the same. And we're going to break this down as we go. Now, let's look at HIMSS. On August 5th, it opened weak. It had already missed on earnings. It was already falling like 30% off its recent highs. Traders saw this, and maybe some piled in short. Certainly a lot of people were leaning short, thinking the sell-off in this name was going to continue. But let's take a look. That opening dip didn't break down. It didn't do what it should have done. It reversed, and right here, right at 9:40, something subtle but really powerful started. So right now, the stock looks like it's doing what it should do. It's a sell-off. But let's look really carefully as we get into that. Look at that change. And you didn't maybe have a good reason to pay attention to it, but keep your eyes focused right on the bid. That's what a short squeeze really is about. It's about what is happening between the bid and the offer. Because when somebody's stuck short, or when they're covering a short, they're going to do it in a relatively price agnostic way. They're not going to fight for price the way a normal trader would. They're just going to get out. So you see how quickly we lift, and then watching as we start to come in, the bid just doesn't drop. It doesn't mean that there's a giant bidder on the tape. They could be midpointing, or they could be sort of paying the offer, but the reality is they're not letting the bid drop. This is our first giant indication that this is not trading in a normal way. When you're in a real short squeeze, you will see very small pull-ins on the bid and very big expansive moves as the bid lifts. Let's completely forget about the offer, about the ask at this point. Because a lot of times traders will put their eyes on the ask and you'll see size on the ask. You'll see it start to pop up. You'll see the size increase. And you'll think, okay, that's going to take it lower. But the reality in a short squeeze is the bidders don't care. They have a lot to buy and they will continue to buy until they are done. We don't know exactly what price that's going to be, but we don't have to predict it. At this point, this is a big extended move, right? You're like, wow, that's really getting up there. Again, train yourself to just watch the bid. Don't worry about the size of the move. Don't worry anything about what's happening with the offer. Don't even worry as much about what's happening with the candlesticks. Just watch the bid. And you notice every time we pause, what happens? We spray up higher. At this point, because we're so extended, what should happen in a normal stock? We should have some sort of reversion. We should have some sort of pull-in. But think about this from the perspective of that buyer, that person covering a short. They just want out. They don't care what the price is. They are just getting out. They probably aren't even looking at the price or even the stock at this point. They're just covering the shares. The whole problem that people run into with short squeezes is first, they'll say that's up too much, I need to short it. The second is they just won't let the short squeeze finish. In a real short squeeze, what's happening? The dynamics are somebody's saying we're covering our short. That means we're getting out of our position. It doesn't mean we're going to one button the entire position, but it says we're covering our short. They start to cover, and it drives the price high. Then they cover more. Then they cover more. Then they cover more. You see the massive volume increase as this is occurring. You see how quickly this bid just steps up. And every time it drops out or every time it starts to come in, what happens? It almost immediately sprays higher. They are not acting, those bidders are not acting in a rational manner at all. In short squeezes, they are acting off of a structural component. They have stock to buy, they're buying the stock, period. We'll talk about some ways to recognize this earlier on in just a second, but keep your eyes glued to this bid and honestly appreciate it because this is a really, really, really strong stock right now. It doesn't mean it's strong longer term. It doesn't mean the fundamentals are great in this company. It doesn't mean it's going to some ridiculous price. Right now in this moment, we are watching someone cover their short. And you notice every time it tries to pull in, every time that stock tries to normalize, what happens? The buyers step right back up and they continue to buy. The beautiful thing about all of this is you can take this momentum trade that we're seeing right here because of the strength, and you can just trade this long with a little bit of a stop below that 9 EMA for a 9 EMA continuation trade. You can take that trade, even though it's extended, even though it's late, because the variables are there, including the strength of the buying. You would enter on that break or on that reclaim of the 9 EMA. You would have your stop just below there, and you're honestly not doing anything until the stock breaks the 9 EMA, that blue line. So you want to let it go as far as it's going to go. When you recognize the strength there, just stay with it. The other thing you can do, that's a very, very easy thing to do, is to sit there and go, wow, somebody's really getting blown out here. But when they're done, the stock should be done. You're not overvaluing the information saying somebody's buying and it's going to go to some ridiculous price. No. That usually doesn't happen. A lot of times in short squeezes, once they're done, once that buyer is done, the stock will start to mean revert, which happens on a much higher time frame. So although this short is getting blown out of their position or covering their position at this point, once the short squeeze is over, we can almost expect the tape to completely flip. Short squeezes tend to end in one of two ways, with total outlandish capitulatory price action, meaning just absolute extension, where we have 3 or 4 or 5 really, really big green candles in a row. Or they end with the stock going into a period of balance, and we see big size on the bid. Where there's been big size on the offer the entire way up and the bidders have not been afraid of any of that, and they've just pushed right through that. They've taken all the size and said, thank you so much for the liquidity so we could get out of our position. When you start to see big size on the bid and it no longer takes the stock higher, particularly in a period of consolidation, that gives you a really good indication that that short squeeze is likely over. Because it's the last little bit of shares. They're getting filled. It's time to watch to see if this stock starts to revert back to reality. And then ultimately, see if this stock is going to reverse. So we have this big consolidation that just occurred, but now what's actually happening? The stock looks like it should have gone higher, but it doesn't. We're looking at a backside trade setting up. When we see this buyer that tries to push, they're doing everything they can to get the stock higher and they can't. It's trying to make a new high and it can't. All of a sudden, we're recognizing this opportunity. Watch the bid. Watch it stick, and then look for the drop. See if you can see the change. Boom. That's your entry. Your stop goes right above the high, and that entire short squeeze should be over. There is no reason at this point for that stock to go back up above the high of the day, or even that lower high, which is where your stop typically goes. It sounds crazy with this entry, but you're targeting VWAP. You allowed that entire short squeeze to be done. Maybe you even caught that 9 EMA continuation trade we called out earlier in that little consolidation after we saw all that strength and how aggressive those buyers were. And then we let that consolidation near the top form. We let the lower high get put in. We saw that bidder on the tape. And as soon as they dropped, that was our clue. That is where the trade started. And then we let the trade play out as it goes along. If it's really a short squeeze, which a lot of times when you recognize the tape as strong as it was there, a lot of times it's just over. And the tape almost completely flips. So instead of having our eyes on the bid, which we did before, now our eyes are completely on the offer. And any attempt to lift higher should be met with additional selling pressure as this stock normalizes. We get a little pop. We're almost to our VWAP target, but we expect the sellers to just take it in a whoosh right back down. Short squeezes in general can be really scary, but they're only scary if you don't know what you're looking for. Here's your mini cheat sheet for spotting a short squeeze setup just like this one. We want to look for a stock with high recent short interest. We want to look for a stock that is down into a major support area on a higher time frame. Then on the intraday, we want to look for a discrete failed breakdown with a reclaim of VWAP, just like we had there. And then we want to see those stacking green candles on increasing volume. We want to look to the tape and see that tape shift. We want to see the bids staying there, staying very aggressive and just absorbing any selling pressure that's there. These are the moments you want to be proactive, not reactive. If you caught even a portion of this move, that's just easy trading. We talk about how forgiving stocks are when they're trading well. You could catch an easy 6-7 points in this stock. But more importantly than the gain, this is about learning to recognize when the game changes. Short squeezes don't just happen. They start and they build and they trap and they explode. And then even more importantly, when they're done, they're done. The stock will move cleanly back in the other direction. And if you want to catch the next one before it happens, make sure to have that checklist ready. Like and subscribe if you want more trades just like this broken down step by step.